Welcome all to the House of Blockchain series by Prysm Group. I'm your host, Guido Molinari, Managing Partner at Prysm Group. Prysm Group is an economic and governance consulting firm. We provide clients with expertise in incentive design, token economics, and governance related to permission and permissionless blockchain. In this series, the House of Blockchain, we will be exploring the leading projects in the space through our house framework many of you may already be familiar with. The house framework shows the key components for blockchain economic design.
It is my pleasure to welcome for today's episode Brittany Laughlin, who is the Executive Director at the Stacks Foundation and former Head of Strategic Partnerships at Blockstack PBC. The Stacks Foundation supports the mission of a user-owned internet through Stacks-related governance, research and development, education, and grants. It is the home for governance of Blockstack's open source technology. Blockstack is an open source and developer-friendly network for building decentralized apps and smart contracts. The mission of the foundation is to deliver the promise of Web3, where every internet user can participate in the value that they create because they have full ownership of their identity, money, and data. Welcome, Brittany. How are you today?
I'm good. How are you? Good to see you.
Great seeing you as well, and thank you for joining us. Why don't we get started and talk a little bit about the value proposition, right? So Stacks 2 is upcoming. There will be a lot of novelties that comes with, the launch. You're gonna have smart contracts that come into play with the Clarity language that you guys have developed. What do you see as main new usages for Stacks 2.0? And can you tell us a little bit about, the upgrade that is coming?
Sure. So the existing Stacks blockchain, a lot of people know because we provide authentication and storage, decentralized storage. So not like Filecoin, but actually just using the blockchain to show who has ownership and who has access to cloud storage. With Stacks 2.0, it's pretty exciting because it actually adds smart contracts as well to those existing tools. And with that, the possibilities are pretty much, unlimited with Web3. So this is everything from smart contracts, similar to ones that you see on other networks like Ethereum. I think those are very popular with DeFi these days, but it can also be used for things like transactions, registering usernames, registering, sort of specific domains in Web3 using the chain as well. So I think there's a lot more that unlocks with this update that's coming in December.
Great, and I'm very excited about all of this development that are upcoming. So now let's talk a little bit about Clarity, right? The smart contract language that you guys have developed, and that recently Algorand has joined as well. Now that you have both the Algorand network and of course you guys using the same language. This allows for inter-chain communication, right? Interoperability between the two protocols. And this is even without having to go through any of the protocols that, allow for interoperability like Polkadot or Cosmos. So from my standpoint now, thinking about what does this create is an ecosystem, that goes beyond Stacks 2.0 and Algorand, but it's sort of like the sum is greater of than its components, right? You have your Stacks, you have, Algorand, and together this could be a potentially viable alternative to Ethereum for developers. And that is something that's really been missing, right? We so far, especially in the context of DeFi that you have mentioned, we haven't really seen any alternatives to Ethereum.
Yeah, well, I think what makes the Stacks blockchain unique is it's actually opening up Web3 on Bitcoin. So the reason that so many people are excited about this is because Bitcoin is a very large player in the ecosystem, but it hasn't really been involved in Web3. So we have seen people try and wrap Bitcoin. We've seen people try to build on top, but with the Stacks blockchain, you're actually leveraging the Bitcoin blockchain. And with Clarity smart contracts, you actually not only do you get the ability to build on Bitcoin as the underlying chain ultimately, you also get the security of knowing that you can actually test your contract before you run it. And that was a big selling point for Algorand and for us and for anyone else who wants to use Clarity, because we have seen a lot of hacks using Solidity because you can't test it until you run it, and that's caused a lot of problems. So I think the advantages of Clarity are there, but to your point, I think the ability to work in Clarity across many different networks is really powerful. And I think we'll see more projects sort of announcing that they're also using Clarity. And you do get that sort of interoperability. So the ability to connect using that language between these different platforms. So we're very excited about it. We're also, we have partnerships with Chainlink. So if you want real oracles in your smart contracts as well, that's great. And so that benefits everyone who's using Clarity as well.
So we're not a technical firm, but we have looked at the difference between Turing complete and non-Turing complete languages. And the choice of doing something non-Turing complete really seems to help in terms of building something that is more resilient in terms of smart contracts, which again, we have seen plenty of problems with Solidity, which is a Turing complete language, and, that related to Ethereum related projects. And again, we don't have to go into the details about that, but I think people have seen the issues that you can encounter with an incomplete language.
Yeah, so, and then when things come online like Polkadot and Cosmos, those are definitely partners I think that we could see working on the Stacks blockchain too over time. So it doesn't restrict us from connecting in.
Great. Well, thank you. And now moving up, one layer on our house frameworks to the financing capital investment. I think you guys have really been pretty unique in your approach to funding. If we think about all the players in the space, right? You have been really at the most regulated and compliant end. And there have been, without naming any names, many other that have chosen a less compliant route. Now, you guys did last year the first ever Reg A Plus offering. And for anyone who's listening who might not be familiar with a Reg A Plus, this is a SEC approved regulated way to offer tokens, in this case, which are deemed securities, to US retail investors. There are some limits, and we might talk about that later. But you did that very successfully, and after you, there was another company called Props. But then after that, we really haven't seen any other major company trying to do a Reg A Plus offering. While we have seen this summer a number of companies doing large public raises, again, not through this particular vehicle the SEC makes available. Why do you think is the case for that? Like, why haven't we seen a boom or Reg A Plus offering once you charted that path for other people? And we haven't really seen a secondary market available for tokens that were offered for Reg A Plus. This might come into play. What do you think that the main issues have been?
Yeah, well, Blockstack definitely was the pioneer in sort of getting approved for a qualified SEC offering. And it seemed maybe like an alternative route, but it did create this new path that you could have a regulated token. You could get US investors who aren't accredited. So the average developer probably is not accredited, but if they want access to the network, they need to be able to access those tokens. So it was really important to us to open up the community by offering it through a framework like this. I think the problem has been that there hasn't been clear guidance on what exiting out of the regulatory landscape looks like. So once you've done a Reg A Plus, how do you then begin to trade in the US as well? So that kind of lack of clarity has been a challenge. And I think that's why we haven't seen more people go through. But we're hoping with the launch of Stacks 2.0, there's already been some information out there that, Coinbase is looking at listing the Stacks token in the US, that with the handing over of Stacks 2.0 chain to miners with this next upgrade, that the token will no longer be in a securities land. And so it will be decentralized enough that it can trade in the US. And I think showing that path, we'll see a lot more people take the Reg A Plus route.
Thank you. And I think, I've read recently that the limits on Reg A Plus have been increased, or I think they're looking to increase the limits. Is that correct?
Yeah, I believe so. So, it was 50 million was the limit last year. I think there's a smaller limit, and I think they're raising that again. So I think the SEC totally my opinion, but I think they want to provide a legitimate way for these assets to exist in the world, but they don't want to be the pioneers. So it takes pioneers to actually help work with the regulators in order to make this work. So it's been a really informative process, and I can't wait to see the full retro once we go from, you know, the offering to fully listed. So hopefully that will be coming soon.
Yeah. So, and I mean, good luck. Yeah, I say that, you know, in my view, the fact that Coinbase is looking at the token, you know, they wouldn't be if there wasn't a highly likely chance that ultimately you guys are going to be deemed, you know, decentralized enough. And, you know, no one really knows what that exactly means. The SEC hasn't really put out a spec sheet, but that's the framework we're all under. And that's how, you know, they deem Ethereum not to be a security. And so this is where the one we have to use. And, you know, I'm excited to see that ultimately people are going to be able to trade out of their position and trade with the token, and who knows what's going to happen, right? So that's great. And now I want to move on, you know, one layer up to the incentive layer of our framework, right? This is composed of the contract, transaction design, the market design, and information systems. And I would like to talk about, you know, incentives around, of course, the Stacks Foundation where you are, and you know, there are a number of programs that you run as part of the foundation. Can you tell us a little bit about what R&D you guys are funding, what educational initiatives you are, you know, supporting, and what is the sort of the breadth of incentives overall that you guys are providing? And how do you provide these incentives to people? Like, is it through, you know, the Stacks token, or, you know, given it's still regulated, do you need to pay still in tradition, you know, with fiat? And, you know, other, you know, what is the regulation around that? But, you know, what are the main sort of incentive structure that you offer?
Yeah, so we have a few programs. You know, some are for existing token holders or people who are looking more to you know, find yield in a platform. And then we also have our grants program. So I'll talk about the first two, and then I'll go into grants. But the way that Stacks 2.0 will be updated is that when miners take over the network, so that's happening with Stacks 2.0, they will actually burn Bitcoin as a way to secure the network. So kind of as a proxy for that underlying electricity. Instead of burning electricity, they're burning Bitcoin, which is a proxy for electricity. So it's kind of layered there. So when they burn Bitcoin, that Bitcoin will actually instead get sent to an address that will be redistributed to Stacks holders who participate in what we call stacking. It's a little bit different than staking because the Stacks holders actually will earn Bitcoin for holding Stacks tokens. So the more you hold, the longer you hold, the more rewards that you can kind of earn in Bitcoin. So that's a great mechanism, not only for miners who want to then use that as like a discount. So they're earning Stacks by mining. They can, you know, earn more BTC back for participating in stacking and kind of continue that loop. And then just for, you know, Stacks holders, whether you want to pool your tokens together to meet the minimum, or if you're a large holder, you can earn BTC just by holding your Stacks tokens. So that's one sort of financial side. The other side is our grants program. So as you mentioned, right now that is paid out in US dollars for the next couple weeks until Stacks 2.0 launches. And that's really just a test to see how we can incentivize people in the network to build really valuable, interesting things with Stacks. So we've had 30,000 worth of grants funded in the past 6 weeks. And those are everything from like someone who's built a compiler that actually works on Ethereum and Stacks. So something kind of outside of, you know, the pure Stacks ecosystem, but that should be done in the next week or so. There's someone who's working on a hardware device so that you're able to use your Blockstack ID using a hardware device instead of using a software device. So you can log into anything that you need, anywhere you are, using that hardware device. So that's very interesting. We have people working on mining bots, things to do with staking, mobile wallets for Stacks. So there's like a lot of different pieces of the ecosystem that people want to contribute that we've seen through that program. And then once we go into Stacks 2.0, we will be able to fund in Stacks tokens. So we have a $100 million treasury at the foundation, and the majority of that will be going to those grants.
And that is 1 million stacks or dollars that you have mentioned that are all available.
That's stacks tokens. So yeah, 100 million stacks tokens now. So
Excellent.
depending on the price, I think it was around 25 cents. This morning. So yeah, it kind of fluctuates with that.
Excellent. And I know, Brittany, you also have as a goal for Stacks 2.0 to achieve a greater level of decentralization, and you want to bring on board new miners to do that. Can you tell me a little bit about the incentives program for miners that would like to join as Stacks 2.0 is launched? And what are the overall efforts that you guys are putting in place to achieve this greater decentralization that is required in terms of incentives that you're providing?
Yeah, so we have a number of programs for miners now. So if you're interested, please, check it out. You can actually start mining on testnet, and we have a few incentive programs running to encourage miners to go ahead and get set up on testnet. So making sure your software is running correctly. You can use our test BTC in order to participate in that mining. So every week there's a new contest around mining and getting set up for that. So that program is run through a new entity called Daemon. And that's an entity that's based out of Asia, but it supports the Stack ecosystem, especially around mining and miners. But with that, anyone who wants to mine, you don't need hardware. You don't need anything special. You just need Bitcoin and setting up sort of a mining software. So like I said, we're funding a mining bot. So it should be very easy for anyone to be able to use that open source bot. Or you can build your own and get started on testnet. So we encourage people to get set up for that because we're looking at a launch December 15th.
And so you guys have an estimate in terms of the level of cost that somebody would incur to mine and what level of returns a miner could expect in the network. And, I was talking to other guests that have come on the show, and some blockchain really try to make it as inexpensive as possible because they want the average person, even with just a laptop, for example, to be able to mine. Do you guys have a sort of an ideal miner you're trying to attract, or is it more sort of an agnostic approach?
Yeah, it's a fairly agnostic approach. Like I said, I think ultimately we'll see people who are mining may also end up accumulating stacks tokens as well because of the ability to mine and to stack at the same time. And it kind of looks like a discount on mining because you're earning stacks tokens and then those then are earning BTC. So you get kind of a loop there. It's obviously doesn't cover it 100%, but you get that loop kind of going. So we do want it to be agnostic. We have seen interest from a lot of Bitcoin enthusiasts who like the idea of one, burning some of that Bitcoin out of the ecosystem, and two, being able to earn it back. But it is very accessible to anyone. We do have a calculator that has sort of, you can estimate your returns on that. They are fairly good based on those estimates. I don't, that's, I don't want to promise anything.
Of course.
Especially before lunch. But yeah, I think they're in the 5 to 10% sort of yield thing, as well as with stacking. So if you get the discount because you're doing both, then it's even better returns for people.
Okay. Thanks, Brittany. And the calculator sounds like a very useful tool for prospective miners and maybe even existing ones. Is there a particular website that people have to go to? Like, how do they access the calculator?
Yeah. So it was it's in a blog post on Blockstack /org/blog. We also have some people who've contributed to open source ones that are on there. So I will send you a link if you want to link it. And we'll make this available.
Okay, fantastic. We'll make this available for anybody who's interested to check that out. Really welcome that. So now moving up one more layer, getting to the token design and of the framework, and again thinking about the Stacks token. Can you tell us a little bit about the token? You mentioned some of the current usages, but you expect new potential usages for the token with the arrival of smart contract with Stacks 2.0. What can you tell us?
Yeah, so I think the token can be used anywhere in the ecosystem. So, right now, if you wanted to register a unique ID, like Brittany.id, that's the one I have, you can do that. We have been subsidizing some of those. So if you don't have stacks yet because you don't have access due to US restrictions, you can still register those before. But I would encourage to do that before mainnet, because then it's on the user to buy those directly. So with that ID, that gives you access to any of the hundreds of applications already built on Blockstack. And it can even help you set up things like if you wanted to build a new application using the Stacks blockchain, say you want to do a DeFi project, you could go ahead and register that domain basically with your ID. So the company's name.id, and have that ready to go. And only you can own that. So it is unique in the ecosystem. So, we have seen some people who are trying to aggregate a number of IDs, the same way domain squatting happens before the launch. But with the launch, you're also going to have the access to use Stacks in contracts to pay for, connections into any decentralized storage. So instead of using AWS, maybe use Gaia Storage, which is our offering. Now the backend, you could always link it up to an existing cloud provider or something like Filecoin. There's a lot of other decentralized storage systems that you could use. So with that, if you're building an app, you don't need to use a centralized service to use your storage. And we think that that's really appealing to people who are interested in, privacy protection, decentralized applications 100%. So we try and make it really easy to do that. And ID is the same thing. So you don't need an email address. You can use an ID without an email. So that's another piece. We've seen our community get really excited about the sort of privacy, decentralization with all those tools.
Excellent. And do you see, thinking about the existing ecosystem of dApps, are apps sort of happy to take Stacks as payment, or, we've seen another blockchain that because there's sort of uncertainty around the token price, that some people have really been open more to stable coins rather than receiving payment in the native coin of the network, because ultimately, people see stable coins as really an alternative form of payment to fiat with very little variance in terms of the value they receive, right? What has been sort of the feeling in the community around, the community of app developers that you've seen, and thinking more about the apps that will develop with Stacks 2.0 with the growth of DeFi? Have you seen any early trends? And related to this, do you see the use of stable coins coming to this ecosystem and playing sort of a big role, similar to what they have started and really grown into playing in Ethereum and the DeFi ecosystem around Ethereum, given their sort of ability to maintain a certain value?
Yeah, definitely. I think that we've seen these stable coins become popular because of small transactions. You may not want to take on that sort of market risk. So we've seen so far mostly people who are using the ecosystem are very excited about Bitcoin as well. So Bitcoin has been used as a proxy for Stacks in some cases. But I do know that in communities in Asia, in particular, like China and Korea, we've seen a lot more interest in USDT or a fixed stable coin that already exists in order to make sort of those small transactions and payments. And that's just because they're very liquid, very easy to get depending on the market that you're in. So I think we'll continue to see that, but I definitely think that there's some people excited about building stable coins on Stacks as well. So we'll see what people come up with, but it's not in our plans to kind of build that specifically for the ecosystem at this time.
Okay, great. And I think this is interesting because we're seeing it more and more. Stable coins are making themselves available on different blockchains. So USDC, for example, was first on Ethereum, and now it's available on Algorand, and that's something that I think we're going to see more and more of. As the demand for stablecoin, as mentioned, has really boomed thanks to DeFi applications. So that's great. Now think a little bit more about unlocking that mass amount of liquidity that you have, on Bitcoin, and from what you're telling me, Brittany, that's a major thing that is keeping you guys very excited with Stacks 2.0 coming. What do you see the role of Bitcoin in the Stacks sort of Clarity Algorand ecosystem, right? We've seen various attempts at trying to approach the Bitcoin holders with things like wrap Bitcoin that allows you to wrap your Bitcoin and use them on DeFi applications. Do you see anything in a particular way that developers that are looking to build on Stacks 2.0 are thinking to go about this. And again, Bitcoin has been core to Blockstack, right, for very long, and in a way, sort of Bitcoin is sort of native to your protocol. What do you see the ways to unleash, again, this liquidity around Bitcoin? And have you seen any trends in the community of Bitcoin holders in terms of mentioning something they're particularly looking forward to that you guys could, offer to them?
Yeah, so I think you hit on some of the key points why people are thinking about Stacks and Bitcoin tied together. It's Bitcoin has this massive liquidity. There's a lot of security with it as well, and I think those two factors make it very attractive for any type of financial application on top. With Ethereum, they also have a very large market cap and they have a lot of DeFi projects on top, but the security and sort of the scalability of the underlying chain is something that has come into question. So the fact that the Stacks blockchain and the Bitcoin blockchain are linked, but they're not necessarily tied, so you're not sending tons of transactions just to Bitcoin directly, gives the security of Bitcoin, but it doesn't take away the scalability of being able to run multiple transactions simultaneously. So the Stacks blockchain kind of takes that. We have seen interest too in things like app chains. So you can build those directly on the Stacks chain. You can use the Stacks token, but you can basically have other tokens that you issue and distribute through that infrastructure, and you're still getting that underlying security of, more of a proof of work chain over time. So we've heard, it's actually just talking to me, you'd be like, what are all the things that we've heard? But I think the list is pretty long, and people are excited about lending. They're excited about credit. They're excited about tying identity to financial tools as well. So like, how could you have your one Blockstack ID and then it's useful across any type of DeFi product that exists? So that way you're kind of getting an advantage of, you have a really great score on one platform and then you switch to another, you have that like consistency of an ID. So I think that idea is really compelling to people who want to offer different products or collaborate on different products.
Excellent. Yeah, and I think we've been fairly involved in DeFi ourselves. I guess that's really been the trend of 2020 so far. And the question of ID, has really come up a lot, right? I guess, in a sense, the old saying goes that you cannot have credit if you cannot provide a credit score. And we know that even in a decentralized way, ultimately you're gonna need to identify the particular potential borrower and and assess in some way their credit worthiness, right? And to identify, you're gonna need ID, and you guys have really been focused on this concept of having IDs for a long time, and the value of ID comes from transferability, right? I mean, if you every single time you use a different system, you have to create an ID. There's gonna be very limited incentives, right? Think about incentives again for a user to do so. And so if I instead I can transfer my ID across different networks or across different products, that's going to make me much more incentivized to put the information that I need in the ID. So, I think, going back to the concept of credit, right now, a lot of DeFi products in the lending, borrowing space require you to put more deposit as collateral than what you actually get. So, this can make sense right now within crypto, but of course, if we want to try to attract the greater public, it's going to be a very difficult proposition, right? If I'm telling you that I'm going to give you 100 that you can borrow in exchange for 150 that you have to lock in, and we're going to need ID to overcome that, because again, we're going to need to assess credit worthiness. And I believe, I absolutely agree with you that this is a very exciting proposition. So now, with that said, let's move on to our last layer of the house framework, like governance. And I think there's really a lot to discuss here. We've seen really a wave of DAOs being launched in the last really 6-7 months. This has really started with Compound back in May, launching Comp, and kicked off this sort of almost a frenzy of trying to become as decentralized as quickly as possible. And of course, sometimes maybe a little bit too quickly for some network that might have not been mature enough. What are your plans, around governance for Stacks 2.0? And do you see this sort of, again, frenzy towards decentralization and this rise of DAOs as, that we've seen the recent months as something positive. Sort of, what are your views around this?
Yeah, so I'll start with the governance that we have with Stacks 2.0. So it's fairly simple. It's very much like Bitcoins. So miners are actually the ones who decide on new upgrades. So at the Stacks Foundation, we help facilitate that governance process. So we have a SIPs process, a Stacks improvement proposal process that happens on GitHub. It's very transparent. We have a technical review committee who weighs in on those different pieces, but ultimately it's miners who decide on those upgrades to the chain. So it's fairly simple on the chain side. I think thinking about other things that may come up in the network that may need to be voted on or decided on, I've been very interested in some of these DAOs and compounds, specifically what they've done with tokens and voting. I think it's really fascinating. We do have a wish list item around voting mechanisms in our own foundation. So maybe not blockchain related, but everything else that has to do with governance. So if you're interested in, if you're listening and you're interested in building voting mechanisms, we do have a research grant that's kind of open for people to explore that. I think though, overall, like DAOs are really interesting and they do get a lot closer to this decentralized future we all keep talking about. So I think being able to watch a lot of these experiments and kind of see what's working, how high are the stakes, what are the financial incentives with them are pretty complicated, but I think it will take many failures in order for like sort of the perfect model to emerge. So we'll be kind of watching very closely. And I know that you guys do a lot of work on this, so we'll keep an eye on what you guys find is the best model for DAOs. And we'd love to, I think at the foundation, do something like that ultimately, just to give more power back to the community.
I think we've seen, to your point, a lot of experiments this summer and, some failures. I think the challenging element really has been that, in many DAOs, we've seen the functioning of a governance token, and there is a kind of a fine line in securities law. And again, we're not lawyers. This is not legal advice for anybody listening. But of course, the more a token resembles in terms of giving control to the user and ownership to a user, a share for a shareholder, the harder it is to make this argument that, this is not a security. And, in recent weeks, we've seen that, looking at certain markets in terms of governance tokens, especially in decentralized exchanges, where more volume on the exchange produce more fees and the token value goes up. And, you sort of create the argument that that is really acting as a security. And I think this is a struggle that as an industry, we're going to have to sort of think about. But then sort of like, the next question, come back to what we discussed before. Is that bad that governance token might be deemed security, right? Because I mean, we do have, as we mentioned, a regulatory regime in the US that allows for security tokens to be issued and eventually traded. So how do we merge the two, right? How do we think about this question of economics, but also law, that you're going to have to address as an industry to keep thriving? Because this regulatory uncertainty that we have seen is really an hindrance to a lot of projects right now. Ultimately, not many have followed your path, right? And so I say this with a little bit of sadness, because I think doing things in a regulated way, in a compliant way, should really be always the preferred choice, right? I mean, it is the hardest road to take, and we've seen this, secondhandedly, right? Working with you guys, and that it requires many more steps than going the unregulated route or avoiding the US altogether. But that shouldn't really be the way that things are done, right?
It's interesting because, one of the views on like creating an app chain on Stacks, the potential is being able to piggyback on a lot of the regulatory work that's already been done. So if everything has already been kind of cleared on that side, are there ways to just have a token that works in your ecosystem without having to worry about some of these more complicated issues that are out there?
Yeah, actually, I bet that is something listener would definitely be interested to learn more about. Can you tell me a little bit more about how people can create something like if I were to create an app chain on top of Stacks with my own token, would that spare me to go through all the regulatory approval that you guys have gone through?
So yeah, this is something that we've talked a lot about internally, and we haven't seen it happen yet. And hopefully we'll see experiments on it with Stacks 2.0. But basically, you would use the Stacks token as your underlying initial token to create that app chain. But then, since it ties back to it, all of that regulatory work is already done. So I think that there are some. So it's not a free reign, like you can do whatever you want, but I think there is that like natural path, like, okay, this is tied to something that has already gone through these hurdles. This is how you do it. This is how it gets distributed. This is where it's traded, like a lot of those hurdles that we had to overcome to get there. And it's accessible to retail investors in the US. So like all of those kind of check boxes, I think you could leverage the Stacks chain and get that out of the box. But again, we'd love to see experiments. If someone's interested in that, we'd love to fund a grant around research around that, because we'd love to see more experiments in this. So the foundation, we're happy to like go fund these interesting ideas. We have a lot of people excited about the research, but waiting for 2.0 to see them actually launch.
Excellent. And again, on 2.0, so you said the date is December 15th?
That's our target date, yep. So our testnet, we're in Krypton. So we have these different phases. And so we're moving towards that launch date very soon.
Excellent. Fantastic, Brittany. So we have covered a lot and it's been a fascinating conversation. Anything else that, thinking about our framework that you feel that we haven't touched upon, or anything else that you might want to add for our listeners?
Yeah, well, I think, kind of looking at your model, we worked with Prysm Group earlier this year with Blockstack. So it's been very helpful to think about all of these layers because they all play in. I'd love to come back and talk more, in 6 months, especially around like contract design and some of the things that are being built on top, because I think clarity gives a lot of freedom to developers to test things that maybe they were afraid to test in other networks because of I'm not sure of the security or the scalability. So I think that's a place I would love to dive more into in the future and see kind of what comes out of that in our ecosystem in the next few months.
Excellent. Well, really looking forward to it. Now, for listeners who would like to learn more about the upcoming Stacks 2.0, it might be that they might be interested in trying to start mining or develop apps on top of it, or hear about some of the grant programs that we've mentioned. Where can they find more information, and who should they get in contact with? How can they get involved?
Yeah, so stacks.org is the foundation's website. We're quickly becoming like the fast resource to direct everyone where to go, because we now have a lot of different entities that do different things in our ecosystem. So whether it's mining or developer tools, we have different places you can go. So we're happy to direct you. We support the grants program. So if you go to stacks.org/grants, that's you can see transparently every app that, every application that's applied, the ones that have gotten approved. Right now, those grants are $5K or less. So they're meant to be very quick and very experimental. So hopefully we can get more out the door sooner before we launch into like larger grants down the road. So if you're interested at all, please come check it out. And we can direct you to the Discord channel. We're like a lot of ecosystems. You can find us on Telegram, on Twitter, wherever you are, but stacks.org is the domain, and then also like our handle on all of those.
Wonderful. Well, I invite any listener that might be interested in any of these grant programs to, that you guys are running, to tune in and ask for more information. Brittany, has been a real pleasure to have you here, discussing with us today. And, best of luck, of course, for the launch of Stacks 2.0. And I'm really looking forward to discussing more as people will start building on, very exciting things on top of Stacks 2.0 in the future.
Yeah, sounds great. Thank you so much for having me.
Thank you. And well, thanks everybody for listening.